All right, guys, just give me 1 second. I'm getting set up here, and then we're going to go ahead and get into it. Let me just go ahead and grab a tasty beer, and we'll be off to the races. I know I'm a little late. I had a problem with my browser. For some reason, TradingView was acting up. It was being kind of weird. So just give me a minute, and we're going to get started. Going to multitask this week and listen to the stream while I play Diablo. That is pretty legit. I'm going to read your messages while you play Diablo and listen to the stream and chug this beer. Nothing like a good old beer chug to start the stream off with, right? All right. Here we go. Let's take this off the screen. All right. So welcome to the stream. If anybody is watching this not live and they're watching the replay and it's your first time here, make sure to smash the like and subscribe button. I stream every Friday at 8 p.m. Central, 9 p.m. Eastern. This is Beers and Bitcoin. I'm Cobra Trading. And I guess we'll go ahead and just get into everything. So there's a lot that I want to go over and that I want to cover tonight. I'm not really going to be doing anything, excuse me, in a specific order. But I do want to first talk about for just like the status of Venom Algo. So I was catching a lot of shit from people like in the Astrobit, like in the Astrobit Discord or whatever, just about like back tests and, oh, how come you don't have a spreadsheet and all of that stuff. The reason why is, first of all, I'm 100% transparent. I post wins, I post losses, and I usually update what I'm doing with the strategy at least once a week. Now, that's not to say I update the strategy once a week, but I definitely give updates here. I go over trades, I go over what it's doing right, what it's doing wrong, where there stands to be some improvement, what my plans are, and all of that stuff. So for those of you that got my messages that are in Astrobit and maybe watching this afterwards, I know that I came off a little bit snarky, but we're traders, we're blunt. I expect constructive criticism. I expect you guys to grill me. And, I give very blunt answers right back as best I can, not to be snarky, but just to be very blunt and open and honest and transparent with everything. So in light of that, now that that's out of the way, I guess the first thing I'll do is I will go over on screen here with the actual algo itself. And I'll go over the past couple trades here. Okay. So last couple trades, right? I guess this starts back from the end of last month, right? So this was before, I believe this was before launch or just right after launch or whatever. Had a short here, closed out the short. Where did that short begin? Where did the short begin? Short began here. Did not get stopped out through all this. It actually held the whole thing and then closed out for a tiny loss here on the 25th. So that entered a short here. About on the 12th, held it for a very, very long time, considering it was a 5-minute chart. So right away, that tells me that that's probably something that I'm going to be looking at for some kind of rolling update. Is why did it hold that long? And then potentially all these lines that you see on the screen, this is all the risk management stuff, right? So final take profits, final stop losses. The blue line is the trailing stop when it kicks in. Clearly the trailing stop kicked in here like way, way, way too late. And this should have been stopped out like, probably around here and just taken the small loss so that it would have had an opportunity to enter short again here and come out with a bigger win. So this line, that's a secondary signal. Currently, I don't have those enabled, and that's something that I'm highly considering doing, because as I do another update, and obviously I'll give notes and proper documentation and real notes on everything that I decide to do. But for instance, if this trailing stop would have triggered sooner, right? Or just, like an actual stop loss in general, just trailing stop in general, this probably would have gotten stopped out over here somewhere, and then it would have re-shorted here and it would have taken profit. Now, this was still a win, a small win regardless, so I'm not really too concerned about that. But that's definitely something that I'm going to take into consideration. Now, if we move on to these next couple trades, right? We had another couple wins, and then there was a loss in here as well, right? I mean, it's not going to win every time. Again, full transparency here. I can almost promise you that I'm almost on the verge of, potentially breaking, obviously this is all my own IP and stuff, but, I'm on the verge of potentially breaking, some kind of like NDA by even showing you this, which is why nothing else is on the screen. No indicators are on the screen. There's no settings. Nothing is named here. I'm not going to double click and show up, all the other settings and start doxing stuff. This is all I want you to see, because these are the lines and these are the risk management strategies that you guys don't see on the Astrobit dashboard, nor will you ever be able to unless you're tuning into these streams. Again, just in the light of transparency, that this space needs transparency as much as possible. I try to provide that. But anyway, moving on here, right? We took a long basically right after this short. It entered another trade really, really quickly, and this rode up really nicely. Now, this exited a lot sooner than I would want it to. So this is also going to be a trade that I look at of, okay, yes, it took a profit, right? Yeah, we scored a win here. That's great. But why did it exit here and maybe not up here or here? Obviously, it's not going to nail the perfect top every time, right? But I feel like this is a little too early. So this is something that caught my attention as well over the last couple weeks, but a win nonetheless. So this short obviously was a loser. Now, did it get stopped out way up here for like a big 5 or 7% loss or whatever? No, it didn't. It decided to hold that and came down, not exactly to the entry, but it was certainly a way smaller loss than it would have been if it closed at the top, right? Like, you don't want to be closing a short at the very top of a trend. This strategy was designed that if it does go into drawdown, the settings are loose enough that it doesn't take unnecessary loss, and will let the price action travel as close back to the entry as possible before it decides to switch. So it did that here. I would have liked it to maybe long a little later here, but again, tops and bottoms. I mean, you're basically chasing the red devil at that point. You're never gonna nail perfect tops and bottoms on any algo or any automated strategy or even manually trading. So it's kind of in my opinion, that's an unreasonable expectation. But regardless, it traveled all the way back. It took a small loss here. And on this next trade, it looks like it pretty much broke even, or a very, very tiny, like a negligible loss, like not even 0.5% here. I mean, if we really want to measure this, I mean, what did it take? Like a 0.3 loss, 0.3% loss. I mean, even if you were running at 5x leverage, it's like a few percent. It's like not serious. But anyway, shorted here near the top. Now, this is the position that I want to really get into here is you can see here on my analysis, obviously this is a 5-minute chart, and I drew the same support and resistance boxes that I have on the 5 and 15-minute chart, I believe, on my other main layout that's not the algo. And this personally is doing exactly what I would be wanting it to do. It looks like we've got a double top here, really nice. It shorted a little early, but whatever. And this is obviously a clear level of resistance. You short into the resistance and you long into the support, unless there's volume contradictory. And we'll get into the real analysis here in a minute. But this is just for the purpose of full disclosure, full transparency, and just kind of updates on what my thoughts are with the algo. So we are currently short here. It's right at about its entry. So it's not a loss or a win at this moment. This to me really does look like it's going to be continuing. So, we'll have to see, like kind of how that ends up going. But, I hope, and let me know down in the comments, like, I don't know of any other, like, I don't really tune into any other strategists if they do live stream, but, let me know, are other strategists like live streaming and putting this actual stuff like from the actual strategy that, fires signals from TradingView on a chart on a live stream? I mean, I'm pretty sure they don't. So, I caught a lot of flack. I wanted to really respond strongly with that and just, show you guys like, I have nothing to hide with this at all. If it takes a loss, yeah, it's going to fucking take a loss. At the end of the day, it comes down to risk management. Now, I'm one of the strategists that has a very intense and advanced risk management strategy on here. I'm also only the second strategist on Astrobit at all to even have a functioning take profit system. Now, since that was adjusted and fixed, there was an issue with that where it wasn't triggering those orders. Now, that was a development issue. And I actually, supposedly, we haven't had a partial take profit to see if that is fixed yet. But to my knowledge, when I was working with the devs, that should be resolved now, because there was an issue with the only other strategist that I'm not going to name on Astrobit that also had the same problem as me. His partial take profits were simply not triggering. So I wasn't the only one with that issue. I was very proactive about that. I got that fixed up as quickly as possible the same week and did a rolling update. Didn't make any changes to the algo settings or anything like that to make it trade differently. All I did was update code so that those orders were actually, they would fire properly in the future and communicate properly with the exchange to make that happen. Thank you, Errol. I appreciate that. If you really want to show your appreciation, make sure that you like and sub to the channel. That always helps me out. Make sure that you follow at Venom Algo. I try to post on there and give updates and just like, informative, educational stuff as much as possible. Kind of a different voice on that Twitter. And I did that on purpose. My main account is just kind of like shit posting and random charts and stuff. So, the Venom Algo is, a little more serious, obviously just geared towards this specifically. But anyway, so where does that leave me with rounding up my thoughts here on changes that I'm considering making? So the very first thing that I can tell you is all of these lines that we have here for final take profits, final stop losses, and this gold and kind of burgundy line are the partial take profits for long and short. These are all going to get tightened in. I'm going to drag all these in and I'm going to really tighten these up because again, here we're talking about the 5-minute chart. So when you're looking at 5-minute price action and you physically have to move your screen up to see where the partial take profit is, I'm feeling now at this point that that's probably too far away. I need to close the percents in on these. And probably also because of what happened back here with this short, probably make a change to where the initial stop out is. So the black swan protection is basically that automatic trailing stop. And that's currently at 7.5%. Upon public launch, it was at 10%. I caught a lot of flack for that because I did have leveraged enabled up to 10%. The first rolling update I did was I decreased that to 7.5 and I slashed the available leverage to 5x so that people don't blow up their accounts. Now, the reason why I had 10x and I had that at 10% is because I had multiple people that were interested in signing up that wanted to have 2 of these, one of them running on spot, basically 1x, and then another that has like, maybe 50 or $100, like walking around on the street money that they could go full degen on like 5 or 10x leverage. So that was the reason for that. Obviously the clientele, this is more geared towards newer traders and stuff like that. And is tightening these also because of the crappy TA? I think you mean PA. I mean, unless you really think my TA is garbage, that's fine. To each their own. I assume you mean crappy price action, but yeah, we are going to go over the price action, and it's not necessarily because of the price action. It's really just because of, I go back over every couple weeks, right? Like I'm going to go back, I'm going to check on stuff. I'm going to see, how kind of things performed through the future. Did we take wins? Okay, cool. Did we take some losses? Okay. What are the losses? And, how bad are they? And just kind of honing in the risk management strategy. Again, this whole strategy is built around my own risk management strategy. And I never normally trade on the 5-minute chart. The reason why this is on such a low time frame is because it will trade more often usually. the first iteration of the strategy that came out years ago was on the 1 hour chart. And I define that as a quote unquote scalper. That's not really a scalper, right? Like the 5-minute chart, that's scalping. And what I'm realizing now is, when you start putting partial take profits at like, something like 3, 4, 5%, it's just such a massive move that with this strategy, usually what will end up happening is something like this, where the price action doesn't even get a chance to take partial profit because a signal will flip and it'll want to flip over. So this is going to be something that I'm going to be looking at very closely as the risk management, moving in these partial take profits a lot sooner. I'm probably going to be moving the stop out to probably 5% or lower, to be honest with you. And a trailing take profit or a trailing stop loss that's set. They're just triggering way too late, and it's allowing for too much drawdown, in my opinion. So that's something else that's I'm going to change. And what I'm very highly considering doing is having a trailing stop trigger immediately from the point that the position is opened, right? So like as soon as this long was opened, boom, there's a trailing stop. It moves up, it moves up, it moves up, it moves up. And the trailing stop immediately continues with it, right? So that if there's any inkling of reversal or whatever, it stops it out automatically and it's profit. It's a win at that point, right? So that would be the purpose for that. I think obviously I'll have to play around and see what this looks like with like back test results and things like that. But I'm thinking that having a trailing stop triggering immediately upon position open, as well as tightening up final take profits, partial take profits, is probably going to be the way to go with this, just simply because it is such a lower time frame. So this all really comes with the process, right? Upon first launch, this was looking good. I think the first 2 trades or so that it made were pretty substantial wins, and then it took a couple losses because that those trailing stops were just not tight enough, right? So that was the first rolling update that I did, where I changed that. I changed the available leverage and all of that. So going forward here, probably in the next week or two, I'm going to be tinkering with this. Obviously, updates will be in the Astrobit Discord for you guys. And I'm probably going to be fixing and really tightening up these limits and having, trailing stops trigger immediately, right? From where these entries are, for instance, right? Like this, instead of like coming all the way down here, this would have probably gotten stopped here. It would have taken a 1% loss. It would have re-triggered along here, probably closed here on this short for a win. So it's something that I'm going to have to tinker around with. Obviously, like I said, I'll keep you guys updated in the Astrobit Discord, but that's pretty much all I wanted to go into with this. Just kind of wanted to clear the air on everything that was going on in the Astrobit Discord with, how come you don't have a spreadsheet? And, how come you're not posting the trade results? Like, guys, I literally go over this and post the trade results like multiple times every week, like whether it's an actual recorded and edited video or the live stream on Friday or a post on Venom Algo. I mean, I post these things everywhere. Like a spreadsheet for the most part is kind of counterintuitive. It's almost a waste of my time personally, because I physically show all of this stuff as much as possible, as openly and transparently as I can. And I have heard from other people that are in the Astrobit Discord that some of the strategists that post spreadsheets, that the spreadsheets aren't accurate. And that's the last thing that I want to be doing is like posting some kind of inaccurate results. Like what you see right now is literally what you get. I explained all of the trades for the last like 2 weeks or so from like way back here, wherever this short was. Okay. That's pretty much the best I can do. So I don't want to harp on this anymore. I'm going to go ahead. We're going to dive in to the actual charts. Let me go ahead and just save this just in case, get this off my screen. And we're going to take it up here and we're going to take a look at first the monthly chart. Okay. We had a monthly candle close. I know that I went over this just a little bit on my little last video or whatever. Not really too much to go over here. We had a spinning top for last month. And then this month, 2 months ago, we had this spinning top. And then basically what we did was last month, for the month of May, we closed our first red candle in 4 months, and it was a bearish engulfing candle. So this is looking a little topsy-turvy, right? The momentum is starting to die off here. We got our first increase in bearish momentum here. That's why this green bar turned lighter green instead of dark green, because we've got an increase in bearish momentum. Our MACD is starting to curl over here, and it's looking like maybe we get some kind of extended correction. Am I saying new lows at this point? No, obviously not. This does look like some kind of bottom is either already in or forming. The lowest from here that I would probably say for now would probably be somewhere around these candles in the neighborhood of like 24.5 or 25K-ish. People have been harping on that number for a while, so we'll kind of see what happens with that. But let's move down to the weekly chart. I want to go through Bitcoin really quickly because there's other stuff in regards to legacy markets that people are not paying attention to, that I really want to inform you guys about. It's good information to have. There's some really tasty tidbits in this. So if you can stick through the Bitcoin analysis and you're interested in that stuff, again, hit that like and subscribe button. Retweet the Twitter post or whatever, if all possible, so we can get some more people in here. But if you have to leave early, no worries. There's always a live replay. The stream probably is going to go a little longer. I got a late start by like 5 minutes. So when I get into all that stuff, we'll figure it out. If I have to go longer, I'll ask you guys if you guys want to go longer, and then we can make that decision when it comes time to cross that bridge. But weekly chart, okay, it's looking a little dicey here to me, and the reason why, again, now I'm not full blown bearish, obviously. Like, am I expecting some kind of like larger pullback here? I mean, yes, it would be nice. Does that mean we get it? No, of course not. But all things considered, when you start seeing your momentum making double tops like this, especially on like massively higher highs, I mean, like, what's the percentage between these highs, right? It's almost a 23% difference in high, and our momentum just flat topped here. That doesn't really look good for some kind of a continuation here, especially if our MACD starts crossing below the zero line into this bearish territory. Like, that would not be good. So this is something that I'm watching very closely here. Now, our momentum, obviously, again, like on the weekly chart, is on the downside here, right? So this is coming down the other way. So that's, again, something that I'm going to be really watching out for. This is your key zone right now that you want to be looking for, is this line right at 25K. Is these wicks, maybe a little 25K, right? At these wicks, we've tapped these wicks, 1, 2, 3 times on the weekly chart. That's a very, very key pivot point here, is 25.2. Okay, so keep 25.2 in mind. That would be the first place that if I was looking to like either accumulate some spot or, potentially get into some kind of a, ladder into like a spot swing or like a 2x swing position with larger size, that would definitely be a good spot for a first bid, in my opinion. So let's come down to the daily chart. Now, there's a lot going on here. This is probably going to take a couple minutes for me to go over. Now, I know that you guys have probably seen these things on other people's charts. It's because it's a very obvious descending wedge. Okay, it's very, very obvious here. Thank Nick, I appreciate that. And yes, the honesty and everything, I try to do my best. I mean, I'm fully doxxed and everything. So, I'm doing my part, like the Storm Ship Troopers. I'm about to do my part here and chug half of this beer. Oh, ooh, that's good. All right. Anyway, descending wedge. Now, some people, depending on how you draw your stuff, I like to include as many wicks as possible. Some people just are absolute like maniacs with it, and they refuse to. They only go like wick to, like first wick to second wick or whatever. It's really, really up to you guys. Like, even if we have this, we still have like, if we really want to draw it like that, right? Like first wick to second wick or whatever. It's still basically like some kind of a channel here, or if you took this high or whatever, it's like an expanding diagonal. Now, there's a million ways to draw trend lines. I've got a trend line video on my YouTube. You guys can check it out. But anyway, clearly a descending wedge here. Now, typically that's a bullish pattern. Okay. And I'm not going to go over everything about this entire price structure from the beginning of the year like I did in my last stream, because I've got legacy stuff I want to cover. But in general, we can't ignore this pattern, right? It's there whether we like it or not. It's a legacy pattern. In crypto, they usually only work out maybe 50-50. I mean, I can't tell you how many times. I mean, look at that. What was it? Wasn't there like some kind of a triangle or something that was down here? And it looked like we were going to just completely break out from it. And then we broke right back into the range. I think it was like right here. We had like some kind of a triangle here. And then we broke like right back into the range. Everyone was drawing this triangle. And look at the nonsense that happened. We broke out of the triangle, we faked out, and then we went right back into the same range that started since the beginning of last month. These patterns work out. They're 50-50. Now, in legacy, if you're a blue chip trader or if you're a bond trader or equities, they hold a little more weight. Usually they end up working out about 70% of the time. That's also because those markets are a lot more liquid and they've got higher market caps. There's just a lot of other things that are involved with that. I'm not going to go into too much detail, but in general, legacy markets, as we know, are vastly different in terms of how they operate and their rules and regulations compared to crypto. Now, moving on from that pattern, we've also got some very important levels here. Okay, so we've got our monthly support and resistance zone, which is still acting as support. Okay, and this one dates back to March. And then we've got a deeper one where we first hit resistance on the way up to our top on this move that dates back to basically the beginning of the year in February. Okay, and then of course we've got this major yearly level that goes all the way back to the, basically this time last year in 2022. Okay, so these are all very important key levels here, and we need to take it level by level and treat it as such. So if we come down to like a 12-hour, okay, I've got this in a little, actually, is that on the 4-hour too? Yeah, it is. Let's go into a little more detail on the 4-hour chart. And then after I explain this and what my thoughts are on this, we'll go ahead and I'll start talking about the that legacy stuff that I want to hit on, including allocation. Like if you've got a large portfolio, like all the money that you trade, the stuff that's not in crypto that you're holding, cash, bonds, IRAs, whatever. What sectors I'm watching that might be flipping over, and which ones that might be bottoming out, and which ones and why. That kind of also gets into the fundamental stuff. And, overall, this whole thing is just really just staying vigilant, making sure that you're properly diversified, not overly diversified, and really just kind of really expanding on and diversifying and making the most of your capital, right? Like you want your money to work for you. You don't want it sitting in a checking account earning nothing, or sitting in some money market account at your bank that's going to yield you 0.04% APY. I mean, or 0.4% APY. I mean, it's stupid. You'd have to have like $1 billion in your local bank's checking account to make any kind of money. It's dumb. Anyway, so in terms of this vertical range now, if we can ignore these lines, okay? If we take those off our screen and we look at our horizontal ranges, okay? We've got our May low, we've got our May high. May high is at 29.82 and our low is at 25.8, okay? So really nice range there. That's actually a pretty large range, 25, 26, 27, it's like a $4,000 range. That's actually pretty significant for a month. I'm considering the price action's been so flat, but keep those levels in mind. Those are really the levels for the highs and lows that we stand a good chance of either sweeping or breaking sometime before the end of the month. But if we really get down into the nitty gritty here about just these ranges, we have a very clear level of support and resistance here. Okay. Obviously resistance is red, support's green, and we've had a throw under of the range. And we've also had this big throw over for a really big rejection here. If we bring up our indicators, okay, and I know it's like RSI and MACD and stuff. I don't really get into too many of my other strategies with the volume and stuff. If you guys want me to do that, like in the next stream, comment down below. I'll be more than happy to show you guys some of my other chart layouts. Those of you that have followed me for a long time, you know exactly which volume chart layout that I'm talking about. It's kind of like my secret sauce for lower time frame stuff. Not necessarily what the algo is based off of, but it's just, you know, a better, you know, kind of short time frame, kind of looking at volume profiles, VWAP, stuff like volume weighted average price, volume profiles, very volume specific. But anyway, throw under, throw over, that is totally acceptable. Okay. In fact, with this throw over, really all we did was sweep these highs. Okay. That's pretty much all we did here was we swept this high. Immediately it rolled back over, and now we're just kind of hovering in this middle range here. This move to me does not look like it's over. If you're an Elliott wave person, it does look like this is forming some kind of a 5-wave sequence where you've got a 1, a 2. This looks like a 1, 2, 3, 4, 5. So this would be a 3, right? 1, 2, 3. And it looks like we're doing some wonky like wave 4 scenario. And this is a pretty strong flip over here. Now, if you just look at the candle formations and just zoom in, you can see exactly what I'm talking about. Tons of wicks to the top and the bottom side, really, really choppy in here. Tons of liquidity grabs to the for the shorts and the longs, just because the price action is so tight in this area. We got a really nice doji here as a top, and we're immediately flipping over. This would be incredibly bearish if we end up engulfing the last green candle. That would be like a double or triple even bearish engulfing candle if we end up getting a close at like 27.1 maybe, like 27.80 or whatever. And that would probably be, you know, on your very, very low time frame, you'd be looking for this level here, which is about 26.9. So call it 27K. You know, and if you're really scalping like for short, that would probably be your first target. Your second target would probably be down here to front run these wicks down at like 26,775. But if that breaks, basically, if you start getting like 4-hour or 1-hour close below 26,775, that's probably when you would definitely have confirmation of like, okay, we're definitely tapping, you know, like this 26.5 zone, you know, and retesting this again from our throw under. That, in my opinion, would be bullish if this holds, right? Because then we're kind of changing price structure, right? Because we're going to have higher lows here. So if you look, okay, we've got a low here. We've got a lower high here. Okay. And then we had a higher low here. This low is actually higher. Okay. This one right here, it was higher than this wick. So that's happening. We made a higher high here. So my expectation would be we make a higher low again here. Okay. Now, I know that that's probably going to take some time. I know we're going to a weekend. It's generally lower volume, blah, blah, blah. I get that. But at the end of the day, retapping this supply area where the smaller demand zone that we have here on the 4-hour chart that goes back to, oh, I don't know, I guess the beginning of last month that we've been ranging. This would be bullish here, right? You've got a higher low. You've got a higher high. Having another higher low here, a bounced, whatever, for like a bounce here, especially if this bounce is hard here, then my expectation would be we're at least going to be retesting this level up here where we throw over. So that's just kind of what I'm looking at, guys. I hope that, you know, on these smaller time frames, I hope that that helps out a little bit. I'm trying to Control Z to get my pattern back. There we go. So, I mean, that's pretty much it for that. I mean, if we really want to come down to like a 1-hour chart here, you've got an even smaller little range that we're discussing. Some people were trying to call this like some kind of like weird like head and shoulders pattern. I've never seen a head and shoulders pattern that ends up looking like a W. Again, these patterns are normally very well defined. Okay. When you see something like this, this is not well defined to me. Like, I mean, what is it? Like that 2-headed girl or something? Like what is this? Like, I don't know. That's not a head and shoulders. Stop. It's not an inverse head and shoulders. Just stop it. Okay. That's not a thing. That's not how this patterns work. They need to be very clearly defined. Like you can't just like have something like this and be like, "Ooh, look, it's a head and shoulders." No, it doesn't work like that. It's gotta, it's gotta have some clear definition to it. Okay. When you see stuff like this, it just no, not a thing. Okay. Let's see, what else did I want to get into next? So now that I'm done with the Bitcoin stuff, allocation that's not crypto. So now I would never disclose publicly, what my entire portfolio is worth or the moves that I'm making in the legacy market and how much money I'm putting down on those trades, because I mean, I'm already doxed enough. I don't need threats and people trying to hunt me down or come after me because like I disclose how much money I have in my brokerage account. That's just not a thing. So, some people are comfortable with that. I'm personally not. That's just not a thing for me. However, I will tell you what I've been doing, and I've been watching certain sectors. Obviously not the bank sector. The bank sector is just trash right now. Everything is dying. Does that mean that there may be some kind of buying opportunity there? Yeah, long term, possibly. But it's just not something that I'm very interested in right now. So basically what I have been doing largely for the majority of the time, my money is in Fidelity. I use Fidelity as my broker. And I have literally for the last year, I have just been, for the most part, I mean, I've been making some option plays and things like that for very short-term stuff. But largely 50% of my portfolio has stayed in cash. And the other like 35 or 40% of my portfolio that I'm not using for options, I have just been consistently rolling over in bonds for the entire year. Why? Because bond yields are through the absolute roof. I mean, let's like, okay, here's what is this? We're not going to start there. We're going to start at the 3-month, right? We'll come this up to a weekly chart. Okay. I mean, like, look at these bond yields. Like, how can you argue with this? This is like, look at this. Really? Like literally for the entire year, I've just been eating all of this up. I've just been eating all of it up. Roll over, roll over, roll over, roll over every 3 or 6 months, just rolling all of that shit over and just taking the coupons and just letting them rip. Now, obviously this is kind of leveling off here. Maybe it's about time to start thinking of getting out here. But at the end of the day, you really zoom this out. You just made new highs, right? Compared to like 2019, this just made new highs. They haven't been this high for a very long time. It looks like the last time was back in 2006. Okay. Are the bond plays pretty much over? Yeah, I would think so. I mean, in my personal opinion, for the short-term stuff, like these 3 months, if you look at these 6 months ones, right? Still 5.5. 3 month was at what? 5.38. I think the 1 year, that's where it flips over and it's like 5.525. Okay, 5.25. Like, I mean, we haven't seen these yields this high in 2 decades. And if you haven't been soaking all this up the entire time, I mean, I don't really know what to tell you. I mean, especially once we started breaking like 1.5%. If you weren't soaking these up and just rolling over your IRA and just compounding the fuck out of these bond yields, I don't know what to tell you. It's literally free compounding money. And if you're doing it from an IRA, I mean, like some of that's taxable, but it's like just the capital gains on that is taxable. So when you're talking about the total profit off of it, it may sound like it's minuscule, but you keep doing this for like a year, like I have, and the profits really start adding up. It's like the Venom algo strategy, right? It's meant to scalp. It may only take 1% profit here, a 1.5% profit there, 4% profit there, 0.25% profit here. But at the end of the day, you do that for a year or two. And, next thing you know, you turned your $1,000 into like $3,000 or $4,000 in like a year with a very, very tiny account. You can do the same thing if you've only got like 5 or 10K, maybe 20K or something, a smaller, allocation in like your actual portfolio. You know what I mean? Like on a brokerage or whatever. Even if you're only using maybe 20K to be doing this every 3 or 6 months, you can easily, just for the 20K that you do, 20K turns into 21K, turns into 22.5, turns into 23 and a half, turns into 25, turns into 27, turns into, I mean, it obviously that's a long time, every 3 months, 3, 6, 9, 12, you get to do that 4 times a year. But in general, that has worked out very well for me. Now, obviously, I'm not really interested too much in, like 10-year, 20-year. Okay. Obviously, these are a lot lower, right? But I mean, these are still here nonetheless. I chart these, right? So, 20-year got hit today, had a big reversal off this key level again. 10-year still just kind of chopping sideways here. We've got an expanding diagonal. 30-year tried to break out of an ascending triangle here. So, there's definitely a lot of possibility for these yields and these bonds to be going up further. Now, that's obviously largely going to depend on the economy. It's going to depend on a lot of different factors. But with inflation the way that it is and how stuck our country is, the United States is for money right now, that's the reason why these bonds keep pushing higher. That's the reason why it's staying right here. And we didn't just get like some big blow off top here and a massive reversal back down to like 2.5%. They're staying up here in this higher range because the US is broke. So that's kind of what I wanted to get into with that. Now, another thing in terms of sectors, okay, obviously, if you guys have been watching, commodities have just been an absolute shit show. Okay. Now, I mean, just looking at these, right, we'll come up to a weekly chart here so I can kind of illustrate this. If you just look at the price action from like 2022, the last year, this is wheat. It got absolutely murdered. Corn is just kind of chopping flat. Again, some people are trying to call this a head and shoulders, which is weird to me. At the end of the day, to me, this looks like an inverse Adam and Eve. Okay, like we're seeing on the dollar, right? You've got your Adam, you've got your big swooping, Eve. That's like an inverse cup and handle type thing. That's what that looks like to me. Not necessarily a head and shoulders. If the right shoulder looked like this, then I'd call it a head and shoulders. But anyway, corn going sideways. Oil, if we get that stupid wick out from 2020 where it traded negative. Like to here. Okay, that's what oil looks like. Pretty much going fucking sideways, chilling at about $70 a barrel. If we come down to is it the daily chart? I don't know which chart I had that on. Anyway, back up to a weekly here. Copper pretty much got hit hard, made a lower high here. Okay. Natural gas has been getting, or soybean oil, has been getting absolutely crushed. Now, this is a head and shoulders pattern. Okay. You guys see the difference here? I really want to point these out. Okay. So you guys really know what real deal patterns like this look like. Really, really nice, well-defined peaks, right? Higher high, higher low, higher high, higher low, lower high. That's your max short opportunity here. Most people are not going to get into that unless you're really good at spotting these kinds of patterns. But that is what head and shoulders is supposed to be looking like here. And here was your neckline was something like this. Okay. Very, very nice pattern here. I don't know how much lower this is going to go, but it's definitely tanked quite a bit from the top, about 50%. So that's probably as low as we're going to get for now. But, same thing, coffee getting crushed, making a lower high. Silver has, or sugar, has actually been doing good. Obviously, I'm not going to get into all the things about why sugar is doing good, but obviously we consume a shit ton of sugar products here in the United States. So, sugar farmers, and most of those are imported. Price of imports are going up, so price of sugar goes up with that. And then you've got your gold and your silver. Now, gold is kind of at key levels here, and I want to pause on gold for a second. A lot of more people, when they think commodities, the first thing they think of is gold. So we're going to pause here, and I'm just going to draw for you a very simple range that you need to be watching out for. Okay, here's your resistance up to about here at 20. You can call it 2075. And then down here, also a very nicely well-defined range here that I'd say is probably to about here, like this order block, okay? And that would be your support down at about 1680. This has been ranging here for a very long time Now, our most recent, let me actually change this real quick to green. Okay, here we go. Now, as Nick just pointed out, very, very possible triple top here. What I personally think is going to happen, I don't think that we see a huge major reaction here and an immediate break of these lows. Gold moves too slow for that. I'm not in that camp. Some people claim that that's what's going to happen. Considering how long this range is held here, I do not think that we're just going to see a gold crash. That's not a thing. However, what I do think is going to happen is we're going to be chopping around in here. And I think on the lower time frames, like if you come down to a 12-hour chart here, I think what we're going to see is a head and shoulders pattern. Again, you guys know I love those head and shoulders patterns, right? Pretty well defined here, okay? Especially on the lower time frames. I think that this personally moves down further before we see some kind of a real pop, but I expect something of this nature, okay? For something like that. Okay, that's personally what I'm expecting. And now I this would go out to like like August or longer. But there's, as Nick just said and pointed out, I mean, there's so many holders of gold. I mean, they're really going to be trying to come in and swoop up any kind of lows that they get. And now you've got a lot of very psychological levels of support, right? So like down from 1900, the next logical level that you'd probably be wanting to accumulate at is like this 1800 area. Okay. And we've seen that all through here. There was a lot of accumulation in here around 1800 because it's been flirting with, 2000 and over 2000 for years now. Like certainly dropping below here, max opportunity is definitely 1500 in my opinion. I don't think gold falls below 1500. So, play this range, right? And be very, very careful and timid. Only be accumulating on spot if you can in that 1800 area. So that's kind of what I wanted to go into with that. Silver, kind of like the same deal. It's just really chopping around here. Everyone says, oh, silver squeeze, silver squeeze, silver squeeze. It's just really not looking like that. In fact, this silver chart, it kind of reminds me of like 2017, 2018 Bitcoin. Like that's kind of what this chart resembles here. And again, like you do have some patterns here, right? Okay. If we're like really connecting wicks and things like that. Okay. This really just looks like some kind of a flag to me. Okay. So while that is possible, and I'm not ruling out some like crazy rip up to like 38 or 40 bucks. And no, gold is probably not going to hit $1,500 in the foreseeable future. Not that I can tell, but this to me right here looks like some kind of a flag pattern. If you want to move this down, maybe you could, and you could argue maybe that you're getting some kind of a bullish retest of this breakout. Okay. If you wanted to draw it like that, you could really bring this in and say, okay, this whole thing down here was a throw under. So there is the argument for that as well. So keep your eye on silver. What's the volume? No, there's no divergence there. No divergence there either. Volume per bar? Well, volume per bar is decreasing because we were coming to the end of an uptrend here on the smaller time frames. But what is the weekly? Okay, yeah. See, so here, this would be my only concern is the spot OBV volume. Okay, clear divergence there. So, if you're looking to get long on silver, this would probably be your first opportunity zone on the lower time frames, like on the daily or something. You'd probably be trying to get this first support and resistance level, around like 21 bucks. So that would probably be my my advice there. My not trading advice. My not trading advice or whatever. Anyway, so in general, moving on from gold, silver, commodities, and stuff like that. Commodities, for the most part, have either been sideways or down, okay, as I just illustrated. Now, what's going on here with that is it's obviously because tech industry for the most part, has in terms of like microchips and stuff like that. Any of these big tech companies that deal in microchips have just been absolutely mooning, especially companies that have been dealing with AI. Okay, so AI has been a huge buzzword. I'm sure you guys have seen the memes about it. Hold on one second. I'm gonna drink some more beer. We like to have fun here. If you're new to the stream, make sure you smash that like and subscribe button. Also, while I'm drinking my beer, comment down below. Let me know if getting more into this legacy stuff and having more insight to this is of value to you in any way. If it is, awesome, I'll do more of it. If it's not, give the people what they want, right? If you're not interested in this stuff, in the future, I can skip it and focus on other things. In general, altcoins look like shit. I'd rather look at legacy market things and give you guys like real deal, insight for your retirement funds and your IRAs and things like that. And your other side of your portfolio that's not crypto, instead of focusing on altcoins that you guys are just going to get wrecked on. And you guys know I don't like trading altcoins, or at least not the shit coins and stuff. Not really my thing. I actually had a really funny video that I want to show you guys real quick. I wonder if it's this one. I don't know if you got, wait, hold on. Can you guys even hear the music? Were you guys even able to hear the music on that before I paused it? Let me know in the chat, because if you can't hear the music, then this whole, oh, you could? Okay, cool. All right. So yeah, we'll start over. That's the Ben.eth.
The fuck I don't. I'm the one who does. It's me. I'm the one out here putting the work in behind the scenes, trying to save crypto, while these devils, Sam Bankman-Fried, Brian Armstrong, they're trying to permanently ruin it. This is not about money for me. I hope you guys understand this. I am here fighting for you. This guy with these freaking glasses on, this douchebag, is out here.
Okay, I'm sorry. I had to do that. I mean, BitBoy at this point is just like literally a walking, talking, breathing meme. Literally everything that he touches goes to zero. I don't know how he's not being fully investigated by the SEC at this point, but it's coming and it's going to be hilarious. And the memes are just going to be absolutely ridiculous. I'm sure you guys saw the one the other day where he was drinking that bottle of like that weird, thick looking like white liquid. I mean, it was hilarious. Like everybody makes fun of like the cum thing and everything with it. It's just really funny. I mean, just the memes are just absolutely hilarious with this guy. But anyway, that whole thing right there, that's the reason why I don't touch shit coins. That's the reason why I don't in general touch any kind of crypto that has a market cap like lower than, at least like 50 to 100 million. It's got to have liquidity. It's got to be some kind of a token, right? That has some liquidity. I mean, I see people trading these shit coins all the time that have like a $50,000 or like a $1 million market cap. I mean, you're basically just asking to get rugged, right? I mean, it's just ridiculous. Like literally $1 million. Like I could convert just like a quarter of my portfolio of my IRA, transfer it into crypto, and just absolutely dunk on you guys. And it's just ridiculous. Like anybody that's like me that has more liquidity somewhere else that wants to come into the crypto game and fuck with people like BitBoy does. I mean, it's just like laughable because they're just dunking on noobs that don't know any better and that just ape into everything. And most of the time it's like, little Timmy in, mommy's basement with the fucking Gatorades and the cum bottle, like trying to ape into like fucking fuck Pepe coin or whatever and just getting absolutely dunked on and just getting wrecked. And that's the reason why I don't trade that shit. Again, let me know in the comments below if you guys would rather focus on like real deal trading shit and real markets and fundamentals and what really moves the markets, trading strategies, sectors, what's going on with Bitcoin, what's going on with the Venom algo. If you guys want me to focus on that stuff, definitely let me know. If you guys want to see less of something and more of something else, let me know. I'm here to give you guys the information. I want to make these streams worth your time, right? Like, obviously, I'm not going to be like, oh yeah, here, tune into my stream. I'm going to do the same old bullshit every week. No, like, I like to switch it up, just like I did today. With diving more into, a little bit of sectors. What am I doing with my other money? How to stay vigilant, like diversify, like what I just told you guys about what I'm doing with, like, for the last year, just like sitting in cash, soaking up the infidelity. It's called the SPAX, SPAXX, and it's literally just like you earn dividends on it. Those dividends have been going up from 4 to like almost 5% in a year. And I've just been like making 4 3/4, almost 5% on my money almost all year long, with it just sitting in cash. And then the rest of it, I've been making even more just rolling over into treasury, like treasury bonds. So that's one strategy that's very, very easy that almost anybody can do, to just make sure that their cash just isn't, sitting in some, dumb local bank savings account that's not earning you any money. It just doesn't make any sense. I personally really like the predictive analysis when marked news. Hit it like NFP. Yeah. Let's see. So, what other sectors am I? Oh, that's what I wanted to do. So last thing, I will let, I don't know. Let me know in the chat. You guys want to go another 15 minutes? There was one other thing that I wanted to get into. Well, actually 2 other things. One is really short because I went over it in a prior video. Let me know in the chat. You guys want to go another 15 minutes? Let me explain my thoughts on the FANG index and like big tech with like the AI and the chip manufacturers and stuff like that, like the FANG. I want to go over the dollar and the FANG index because it's 2 things that most people aren't really looking at. So, screw it. I'm just gonna dive into it. Fuck it. Whatever. Let's do it. I even have Pepe, the ticker, on my, like, this is why I don't trade shitcoins. Okay. Like look at how bad this looks. I mean, now I know that stocks look like this too, but like, this is the pump dump, like, and now it's back at where it dumped to. And like, why? It's like trading Zcash, right? look at the daily chart on Zcash. I mean, like, can you imagine holding this thing and like you never sold it like in 2021 or something? Like you bought like here and then just never sold and you're still holding from like $135. I mean, it's just like, this would be like absolutely brutal to be holding this. To be honest with you, I think that I think Gainsey is still holding a ton of Zcash that he aped into at like $100 and he's still fucking holding it massively underwater. I'm not, don't quote me on that. I'm not sure, but I think he might be. Where is it in here? Okay, so dollar. I said dollar first. We'll do dollar first. Okay. Already on this daily chart. Okay, cool. Already on the daily chart. So recently we have been getting a little more volatility here. Okay. And you guys know that in that last video that I did, if you guys watched it, it wasn't a short one. It's actually posted on my channel on the front page right now. I think maybe only for new subscribers, but if you go to the video section, it's like the most recent one there. And one of the first things I do is I highlight, I think it's even in the thumbnail, is this massive Adam and Eve pattern. Okay, that's being a bottom. Literally, what is happening now, I think that was a couple days ago. So maybe like here, somewhere over here, one of these candles at the top. And I said, okay, check it out. I've been watching this for weeks. It looks like we're going to cup and handle and break out higher. That is literally playing out like right now. I mean, like this bounce for me doesn't really mean anything right now. This could definitely dip further. And the little alpha that I want to give you guys, if you guys didn't watch that video, is this: measure with a fib from the bottom to the top. I like the 400 SMA on the daily for the dollar. So what I see is this. First of all, I see this massive Adam and Eve pattern, right? A very sharp V-shaped recovery, an immediately rejection, and a very long swooping bottom, okay? Typically, this second half, the Eve part, turns into a cup and handle. This is what I'm predicting for this. I mean, it's bullish for that. I mean, it would be bullish on this chart, but it would be technically bearish for basically every other market. Is I want to see this can retrace, no doubt. I mean, like we could see like some total like crypto pump, right? On like a move further down for the dollar. I don't want to see 0.5 break. Okay. So like 102, basically, like 102 has to hold in order for this to be a valid cup and handle here. Typically with a cup and handle, if that's what is forming here, it doesn't have to do this. Like we could just break out from the Adam and Eve, you know, and just like literally do one of these. I'm assuming this is going to be some kind of a handle here because of how this price action is looking at this top. I want to see 102 here for a real nice proper handle, and then just an absolute like shit show rocket to the moon. This is personally the most likely scenario in my opinion, because this is going to be what causes the most pain, right? We're starting to go down. Markets are starting to flip over. Maybe people are getting trapped in their shorts. Okay. And this just absolutely comes down a lot and just wrecks all of the early shorters and then just immediately skyrockets and takes off without them. That would be the absolute max pain scenario. And these are levels that I'm watching. Now, look, this level that we just bounced off here, this little dotted line, if we take the fibs off, just so that I can give you guys a clearer picture here, right? This line that we've been bouncing off of, we used it as resistance here. We're using it as support here. We're flipping. We're retesting a very clear level here. This is why I think if we do go down more, it's probably only going to be down into here. Okay, 102-ish. This level goes back for so long. Look, resistance here, support, all the way back to here. We retested it as support here, resistance. We broke down back through it. This level has a lot of history, all the way back to, you know, this time 2022. You know, these dashed lines and stuff, you know, I don't draw these levels for no reason here. Yeah, so I agree with Nick. Liquidity grab down low, like here on the dollar down low, and then just an absolute rocket to the top side. And that would be like ultra bearish for the markets. I think that if we're able to break 105 again, it is going to be with significant topside momentum. Significant. And when I say significant, I'm talking, you know, like it's going to be a real shit show for the S&P 500. Everybody that's been, you know, like buying calls or whatever the fuck they're doing because they're so overtly bullish, is just going to get absolutely blown the hell out. So what I'm going to do now is I'm going to go to the FANG index. So if you guys saw my post earlier today, let me see if I can find it. And I will post it for you guys up here. Where is it? Where is it? Fuck. What? Where did my oh, here it is. This. Okay. This post. So I posted that and this came from a Fortune article. Okay. Everyone's saying SPX is going to full send, but forget that only 5 stocks out of 500 make up for 96% of the S&P's 500 gains for the year. Those stocks are, you know, as we know, the obvious ones, right? Intel, Nvidia, Google, Facebook, Apple. Okay, those are the ones, right? Now this article is here. I gave you guys some more alpha here. If you know, why is it a it's a paywalled thing? It's okay. Well, click the little magical button here for reader mode, and it'll give you the entire article, and you don't have to pay for it. So a little alpha there for, you know, using news sites. But anyway, that is 100% true, right? Apple, Microsoft, Google, Amazon, Nvidia. Okay, these 5 have contributed a redonkulous amount, something like $2.83 trillion in market cap. Okay, so that's kind of a really big deal. Now this goes back to the S&P 500. Okay, this is my daily chart. This really to me looks like the most likely scenario. This is another thing that like nobody wants to draw because everybody always wants to be so bullish all the time. But yeah, like this is another thing that I can't deny. Everyone's like, oh, look, Bitcoin is decoupled from the S&P 500. It's like, really? Is it though? Because I don't know. I mean, I'm pretty sure on the daily chart, I've got like a descending, you know, a descender here and an ascender here. So, I mean, are they really decoupled? I mean, looks kind of inverse to me, right? So yeah. And anyway, we know for a fact that, you know, like SPX goes down, Bitcoin tends to go up. Now they've been kind of going up overall, you know, together or whatever, but I just thought that was kind of funny how we've got inverse wedges forming at the same exact time. Another thing that no one is really paying attention to. But you know, whatever. Anyway, if we bring this up to, I believe it's a weekly chart. I posted this earlier today and I said with a question, if you guys can guess what part of the S&P 500 were these bar patterns from? And these are not multiples. This is just one together, right? Okay, I'm dragging them around so you guys can see. This looks extremely similar to this bottom that we formed here. Okay, just like this whole structure with this big flash crash and then a slow grind to the top side, a stutter, and then a big dip to the downside looks extremely similar, okay, to all of this price action here. These are uncanny in how similar they are. Okay, so those would be the two scenarios of what would happen. Basically, from here, either one says we grind higher overall. I'm more inclined to think that we do this one, the bottom one. And we see that wedge play out here in this area, right? But the first one, if you guessed correctly, was from here, okay? The end of the 2008 crash, okay? That's this one, the end of the 2008 crash. The one before it was actually this one, leading up to after the dot-com bubble burst, okay? I have these labeled down here, dot-com bubble, real estate bubble. This was after the real estate, the dot-com bubble, excuse me, leading up to the 2008 housing market crisis. So I don't know. Let me know in the comments below which scenario do you think is going to play out here? And if I go to a monthly chart, I mean, I have all of these things laid out here, right? I've got you know, I've got the Black Thursday Great Depression move labeled. This one was World War II. This one was Vietnam. This was Bretton Woods with Nixon, Black Monday crash, dot-com bubble, real estate bubble. And then obviously the most recent kind of dip that we had was the COVID crash. And at the end of the day, if you really look at this and you draw all of this stuff on your chart and you really look at, I think it's on the weekly that I have these, and you start looking at the relationship between how many bars there are with like huge runs, right? 11,600 days. That's basically, what was this? 1968, almost 1938. So that's about 30 years of bull market before we went sideways and had two major market crashes basically back to back here, right? Within like, I don't know. This was the Vietnam War, 1968 and 1973. Yeah, so within like a 10-year period, we had like two very major market crashes here. And then again, what happened, right? This looks very familiar, right? This big flash crash known as Black Monday in 87. If you discount that, you've got another about 10,000 bars in between here. That's about another 30 years between 73 and 2000, 2003 or whatever. That's almost another 30 years. It's like 27 years apiece. This is about 27 years or 30. And then this, if you discount Black Monday, is like another 27 years here. And then what happened? The market went sideways and we had two very large crashes, basically back to back, within a decade of each other, right? 2000, 2007, within a decade. This whole cycle repeated exactly like it did here. Okay. And now what's happening, again, if you discount this little correction, which looks very, very similar to the Black Monday crash in 87, that COVID crash, as we now have dubbed it, this is very interesting because now you're getting to the point where we're starting to creep up here on, on that like 27, 30 year-ish time period, right? So like 2027 would be here. Okay. So it is very possible that we just slow bleed up the whole way for like another 4 years, right? We get inflation under control. Everything starts getting back to normal slowly over time. The Fed keeps rates higher for longer. We see unemployment go up. We see prices come down. We see demand come down. We see labor market catch up, and the wages catch up with the labor market and all that stuff. Everything starts kind of readjusting over a small time period or whatever. And then that is probably going to be, when you see like, S&P 500 up to like 8,000 or something, that would be like, okay, we're in for like a major, major crash here. So that was something that I wanted to highlight. The last thing that I want to highlight before we go, I know that we're almost, the 15 minutes over, is I want to look at, if you just look at the daily, okay, here on the S&P 500, clearly we've been grinding a lot higher, right? Our RSI has literally just been like flat topping all through here because we've been so grindy sideways. But what I want to point your attention to is just this absolute clusterfuck of spot volume here, right? Like on the indexes, like this looks absolutely abysmal for how this price action looks. This is not how you want your OBV to look. Okay. Like this is very not awesome. Okay. Very, very clearly descending. And this is very, very clearly ascending. That's hugely bearish. And I just want to point that out. And when you take into account the whole thing where 5 stocks have made up for 96% of the S&P 500's gains for the entire year, that leads me to point your attention to the FANG index, which is something not very many people pay attention to. Also, very large red flags here all over the place. Okay. Very, very large red flags here all over the place. We're getting into the oversold territory for the first time since 2021, or overbought, since 2021. The volume here is just the spot for these stocks is just absolutely terrible. That means that the majority of this is derivatives. Okay. It looks like we had what is this? 1, 2, 3, 4. We had a 5-wave sequence down. Okay. And it's looking like that 5-wave sequence down may have turned into a head and shoulders here potentially. I don't really like this bottom for that. I don't like those double bottom head and shoulders, but this was a W correction regardless. We retested this support level and broke higher. So either way, this is like really, really big here. And what's concerning me is this, again, like the S&P 500, this is highly concerning to me. The other thing that is very highly concerning to me is, where is it? And I think I went over this in my last video, is this right here. Okay. Look how closely the MACD lines are to each other. That's not the kind of thing that you want to see in a very strong uptrend. The momentum here is fucking flat. That tells me that this is 90% derivatives, futures, and options. Like none of this is like spot buying any of those stocks because the stocks are just skyrocketed. They're just too expensive. They're super overvalued. Nobody wants to buy them on spot. So what's everybody doing? They're buying the hell out of calls and they're playing options and futures, okay, on the stocks that make up this index. Now, the FANG index, as you guys know, that I already touched on this, Intel, AMD, Alibaba, Google, Facebook, Nvidia, yeah, like the big ones. You guys know. Anyway, this is a big red flag. Like if you guys are in tech with your main portfolios, this should be alarming too. Sorry, I heard a car alarm go off outside. I was hoping it wasn't mine. This should be pretty alarming to you. Okay, where is that resistance bar Why is it only on like the 15-minute chart? What is this? I think this is wrong and it's supposed to be like on the hour, right? Yeah, big resistance zone here. Anyway, if you come down to a 15-minute chart, I mean, this thing has just been an absolute powerhouse. I mean, just like no retest here, small retest one time or maybe two times if you want to call it that here. Very small retest of this high here. And I mean, this thing has just been absolutely grinding hardcore. The momentum doesn't really say that. The volume on the lower time frames is tapering off. There's massive divergence on anything below a daily chart. And this daily chart is just like ripping like crazy. And it's mostly fueled by futures and options. Okay, so that's kind of the last thing that I wanted to draw your attention to. If there's anything else that you want me to go over real quickly before I end the stream, go ahead and let me know in the chat. Other than that, again, comments. I thrive off of everyone's feedback. Nick was asking me a couple questions in the chat. Nick's really active tonight. I really appreciate the like the not the necessarily. I don't think engagement is the right word for it, but your participation. That's the right word. I appreciate the participation. That's the reason why I like doing these streams. But let me read through some of these. Liquidity grab the moon. What's your real first name? My first name is Scott. And when ETH bought. So once I get when ETH bought. So the easiest way for me to man, it is really hot in my room. Hold on one second. I got to turn the AC on. It's like really hot in here. Hold on one second. Oh man, I was sorry about that. I'm like sweating here in my office. My real name is Scott. When ETH bought, I love trading ETH. So I'm not a huge ETH trader myself. I'm not going to go ahead and get into the chart right now, but I am going to sum up and had call out at work feedback. You are awesome and we love your analysis. I appreciate that, Carol. And it's no big deal if you didn't watch the whole thing. You can watch from the beginning once I'm done streaming. Within I think like 5 minutes or so. YouTube's pretty fast with it now. Within like 5 minutes, the replay will be available, and you can watch through the beginning. This is like I was really excited for this live stream tonight. Everything that I wanted to cover, I covered. I did a good job of it. I went into the Venom Algo in depth. I went into Legacy in depth. So definitely watch from the beginning if you missed it. But the very first thing, Nick, that I'm going to be doing with the Venom Algo is that is my first priority when it comes to diversifying the Venom Algo pairings. Okay, so currently, yes, it is on Bitcoin only. That is going to be changing probably after next week, probably sometime before the end of next week. I'm going to be pushing a rolling update, as I mentioned, with all the things that I went over from the previous trades at the beginning of the stream that it took, how I plan on tightening up the risk management, how I plan on tightening up the trailing stops and partial take profits. So we can really start booking, trading more often, booking more profits sooner, and cutting trades for less losses. Those are all things that are going to be happening before the end of the week. I'll give more details on those in the Astrobit Discord and as well on the Venom Algo Twitter. Link is in the description. Make sure you're following all those for those updates and stuff if you're not in the Astrobit Discord. And right after I do that, obviously, like I'm going to need to wait and see how the algo performs after those changes and, just kind of document the trades once a week, go over them on the live streams. No, I'm not going to bust my balls and waste my time making a fucking spreadsheet. You guys want to know what the trades are? You guys want to see the past trades? Come in and tune into these or follow at Venom Algo. That's as simple as that. Anyway, once I get that done, and the Venom Algo pairing for Bitcoin is doing its thing after that rolling update, that's when I'm going to start optimizing it with AI and machine learning and adapt it to other pairings. My first pairing that I'm going to do is Ethereum, and I am planning for altcoins. I'm not going to mention which ones because I haven't really made a final decision on that. But I am planning on putting it for altcoins. And now you guys know I hate altcoins, but I don't mind layer twos. Okay. So I'm talking the big chains, right? Like I'm talking like Link, AVAX, Algo. Okay. Like big layer two chains, big layer two protocols. Okay. Stuff like that. Those are going to be the ones that I'm going to be focusing on. Okay. Like I'm not going to be making one for, need a Litecoin one. I think you're the first and only person to request Litecoin. I don't think anyone on Astrobit has a Litecoin bot. So that would be actually very interesting to make, because I know that there's a big Litecoin community out there. So yeah, and see, honestly, Carol, Nick, when I went over the trade results from, like within the last month or month and a half or whatever, I'm surprised that it even took any wins at all, to be honest with you. It took like 2 small wins and and like, I think it took one larger win, like one or two basically break evens, and then like one smaller loss or whatever. I'm surprised it made any wins at all. I mean, the price action has just been so garbage, so low volume. To be honest, if it's performing like this in this kind of trading environment, I already know that it's really going to be good. But in general, I do need to be tightening up those partial take profits. I need trailing stops to be triggering as soon as it enters into a trade to protect you guys from unnecessary loss. Those are things that I'm going to be changing regardless. But yeah, 100%. I am going to be. Yeah, Nick, you can DM me anytime. DM me. Just DM me on Discord. DM me on Discord. I have someone help me with the Venom Algo Twitter. So you might not talk to me. You might talk to a marketing person. So the best, most direct way to get a hold of me is to just add me as, like a friend or whatever on Discord. You can go ahead and try it now on stream. So if there's a problem with it, I can fix it. Or you can just type, if you're comfortable with it, you can type me your Discord handle and I will message you manually, just to ping you. And we can talk tomorrow. But yeah, 100% totally open to that. I love engaging with my followers and stuff like that. That's totally fine. Anyway, yeah, no. So maybe niche it, like you said, and do some kind of a Litecoin bot, but I definitely want to do Ethereum first. Litecoin will be a high consideration. I don't think there's very many algos available on Astrobit that have Litecoin as a pairing. But I want to start, I made a joke with Nick, the CEO of Astrobit, and I was kind of joking with him and was like, there used to be bundles on Astrobit, right? Where you could like buy one strategies would bundle like 1 or 2 or 3 strategies and the bots with them for like a special price or whatever. And I was joking with Nick, the CEO of Astrobit. I was like, man, I want to make bundles great again. Like I don't want to just have like 1 or 2 or 3 algos. I want to have a whole Venom algo suite. I want to take over. I want to have, I don't just want to have like Bitcoin and Ethereum and XRP. Every strategist on Astrobit has Bitcoin, Ethereum, and XRP. That's not really what I want to be doing. So if I want to, like be able to offer a product that's a little more diverse and do something a little different that other strategists may or may not be doing, especially on the Astrobit platform, is, to start getting more involved in those layer 3s. I want to have an AVAX. I want to have an algo. I want to have, potentially a Litecoin and whatever else. Am I going to have it do shitcoins? No, they're very illiquid. It would just be a total disaster in terms of signals. It would just be a total disaster. But that is the goal, like long term, is to not just have 1 or 2 or 3. It's to have like a full suite so that I can, call up Nick, the CEO, and just call him up one afternoon and just be like, hey, you need to relaunch bundles, or let's do something special with me and work something out with him where we can make bundles great again on the Astrobit exchange. I understand why they got rid of them. that's kind of like an inside thing. I don't know if I'm allowed to disclose why they got rid of them. It wasn't like a money thing. It was it was actually, I can disclose this. It was just because it's just general information. It was just too goddamn confusing on their marketplace. It was just too confusing. Like that's pretty much it. Fully agree. At this stage, you won't get that 10% move. Yeah, no, we're not going to get those 10% moves. That's why I want to tighten those up. Yeah, Carol, you've been around for a while. I know that you've had bundles and stuff like that. Need to diversify into multiple bots. That way I have chances of catching multiple moves. 100%. That's the best way to go. See, like you're the kind of person that uses the bots and the algos on Astrobit that I respect, because you understand how to diversify with automated strategies. You don't put in too much. You don't bet the farm. You keep the leverage low. You keep them contained, but you put just enough money in each that it makes you, it makes you a little bit of money on the side. Some are scalpers, some are swings. You know how many of each that you want and how to balance your money and use them appropriately. I feel like there's a real lack of education surrounding that stuff. So let me know in the comments down below if you would like me to make just a dedicated recorded YouTube video on how to properly diversify with automated trading strategies and more detail about that. I would actually really enjoy making a video on that for you guys, especially those of you that are newer to all of that. I followed your trades since you first came to Cardinal House. I really think you're a down-to-earth guy. You're honest. Hey, man, I appreciate that. And Cardinal House, honestly, I haven't been, I don't think I've been in their group very long. And I know that I need to post more there. I just really have not been trading manually very much. I've been focusing on my IRA and my family. My daughter's home from school for the summer. And I've got a lot of construction going on in my office. If you guys follow my main Twitter, I made a post on that today. Like I just ripped out a whole bunch of moldy baseboards and moldy wall from my office bathroom. It's been a disaster in here for 2 weeks. So there's definitely been a lot going on. Wife was changing jobs, all that stuff. Needed take profit one and a break even stop loss after take profit one. Yeah. So the way that that's going to end up working, and I will give details on this later, is, I wonder if I can, maybe if I pull, you know what? I'm going to pull this off the screen here. I can give you, I've already been working on updates for this. So let me come over here. Let me make sure not to fucking dox anything. Can I even show this? Yeah, I can show this. This is what I've been working on. Okay. This is probably more realistically what it's going to be looking like here. Okay. This trades a lot more often, as you can see here. A lot more often. Now, that does mean that in very choppy, fucked up price action like this, it might take more losses. However, you can see how much closer all these lines for the risk management are, right? Okay. A lot closer. And on these trades, for the most part, if you come like back to here, you can see how very much quickly all of these trailing stops trigger. Okay. So, we'll start back from here, right? It shorted, took profit, longed, took profit up here. Oh, look, it hit the, it hit the trailing stop here. Boom, immediately re-entered into a long, took a small win for a short, longed here, sat through all the drawdown, didn't get stopped out, took a win, a small win, but a win nonetheless, shorted this absolute top, took the short take profit longed the bottom of this, got stopped out here, stayed flat until it attempted to long this dip, which was a pretty long time on a 5-minute chart. That's like 3 days worth of price action here. Longed here, took a win, shorted, another win, longed here, shorted here, longed here, partial take profit, long exit, short the top. So this is kind of what I've been tinkering with now for like a couple weeks. Short take profit, whatever, longed, short, okay. Obviously, these are all back test, right? It longed here. This is where it started having some problems, right? Just like the current algo. started having some issues here. Longed, short, small profit, shorted way too early, didn't get stopped out though. Longed here, terrible move. There isn't really too much that I can do to filter out all of these signals, but I've been doing the best that I can. Regardless though, it got stopped out. Longed here again, tried to catch those dips, right? You know, you try to short the rips and long the dips, right? That's what you attempt to do. This long did not get stopped out through all this. It came extremely close, but it did not get stopped out there. Instead, it held that long the entire way, took partial take profit, and then the trailing stop loss took it out. It re-entered another long, took profit on a short, held this whole thing, short partial take profit, came back to the trailing stop, which was already obviously in profit, closed it. Tempted along the dip here. I mean, like, you know, I can just scroll through and do all of this, but in general, you can kind of see, you know, what's going on here, you know, with how much tighter this risk management is, and it's trading more often. And yeah, sure, it's going to take more losses, but it's also going to take more wins at the same time. And that's really what I'm getting after here is, you know, I want those trailing stops to trigger sooner, and I want those take profits to be tighter to actually give it a chance to be locking in those profits. Funny enough, the last couple trades are actually about the same. However, in the current algo, it did not short here at all. It longed here and then it held the long until like here where I think it, I don't know. I know that these two trades are the same though. Like it was basically a break even, and those are about the same, but this is just kind of like a little inside look on what I have been working on currently. I hope that, I mean, I can't really be more transparent than this, right? I mean, I'm physically showing you guys what I'm working on for an active update of how it would change the way that it trades. I mean, obviously we can't go back in time. I can't update the algo and then give you guys the profits from all these trades, but moving forward, this looks very promising. It's trading more than it is, and the risk management is a lot tighter, and it's being a lot more conservative, just like I am when I trade. The whole point of this is to make a strategy that trades as similar to me as possible. And I think I'm getting very, very close by honing in these risk management settings here. So I think that's pretty much it. I'm going to go ahead and log off here. I really appreciate all of the participation with you guys. I appreciate all the love and support. Make sure to like and subscribe. Again, I do this every Friday, 9 p.m. Eastern, 8 p.m. Central. Beers and Bitcoin. We like to smoke some weed. We like to drink some beer or whiskey. We like to have a good time, talk markets, go over algo trades, all of the things. I hope that you guys enjoy this kind of content. I try to provide as much value as possible, open and transparent as possible for you guys. And yeah, I think that's it. I hope that you guys have a really blessed weekend. Spend it with your family. Take some time off. Do your thing. You know, just relax. Have a beer. You know, have a beer on me. Cheers. And you know, until Monday. Luckily, next week is a full week. It's not a holiday weekend. You know, I'll be back in full swing. 2 short videos. I'll probably do one dedicated video on algo diversification on Astrobit. As a good video there for that. And then again, you know, like live stream on Friday, I try to do a lot of videos. I might start getting into shorts, doing YouTube shorts as well, or recording a full length video and then cutting it down to make a short. I don't know. We'll see how that goes. I edit and stuff, all my own videos. I do freelance work on the side, and that's my daytime job, web design, motion graphics, video editing, on top of trading, running my algo, staying in tune with everybody, making all my own content, live streaming. It's like a really hectic life. But it's fun. I love it. And if it wasn't for you guys, I obviously wouldn't be doing this. So again, I really hope that you guys have a blessed weekend. Be safe out there. Enjoy the weekend with your holiday, you know, enjoy your weekend basically. And until next time, happy trading.